Hey there, future homeowners. Are you holding off buying a home this year because, well, maybe you're worried about your credit score and that it's not high enough? Well, here's some good news. I want you to lean in here. You don't need a perfect credit score to buy a home. In today's video, we're going to bust some common myths about credit scores, explain what lenders are really looking for, and most importantly, give you practical tips to improve your credit score so you can qualify for much better home loan options. If you're new here, my name is Burgess, your local trusted real estate expert, and I love helping first-time home buyers achieve their dream of home ownership. If you find this video helpful, don't forget to like, subscribe, and reach out with any questions. My information is going to be here on the screen throughout the video. I'm here to help you every step of the way. So let's start with a big misconception. You need a perfect score to buy a home. Huge myth. According to Fannie Mae, only 32% of people have a good idea of what credit score lenders actually require. That means 2/3 of buyers are overestimating the minimum score they need. But the truth, there's actually no single cutoff score across all lenders. Each lender has its own criteria and risk tolerance. In fact, average credit scores for approved home buyers vary depending on the type of loan you choose. For example, FHA loans are popular with first-time home buyers because they're actually more flexible, allowing for lower credit scores compared to conventional loans. Well, what does that mean for you? Even if your score isn't where you'd like for it to be, you may still qualify for a loan. Your score does affect the terms you're offered, like your interest rate, so improving it can save you money in the long run, and a ton of money. And the best way to know where you stand is to work with a trusted local lender. They'll help you understand your options and create a plan that works for you. So reach out, let's have a conversation, and we can talk about your specific situation, and I can help guide you to local trusted lenders who are amazing to work with. Okay, now let's talk about how you can improve your credit score to open up more opportunities. Now, these 3 tips are simple but incredibly effective, and I'm going to give you some details on each one, so let's dive right in. Number 1, pay your bills on time. This might seem obvious, but it's one of the most important things you can do. And you may ask why? Well, because your payment history makes up about 35% of your credit score. Lenders want to see that you can reliably make payments. Even one late payment can negatively impact your score, so prioritize paying on time. And here's a pro tip. Set up automatic payments for things like credit cards, utilities, or recurring bills. That way, you never have to worry about missing a due date. Number 2, pay down outstanding debt. Your credit utilization ratio, or how much credit you're using compared to your limit, is another major factor in your score. Ideally, you want to use less than 30% of your total available credit. If you're carrying high balances on multiple accounts, focus on paying off the smallest ones first to free up credit. This is what's called the snowball method, and it's super motivating because you'll see progress pretty quickly. And number 3, hold off on applying for new credit. When you apply for new credit, lenders do what's called a hard inquiry on your credit report, and too many of these in a short period can lower your score. If you're planning to buy a home soon, avoid opening new credit accounts like store cards or personal loans. Focus on maintaining and improving your current credit in the accounts you already have. And here's a pro tip. If you're curious about your credit score, you can check it using free tools like Credit Karma or your bank's credit monitoring service. These soft inquiries won't impact your score, but one thing to note is those free reporting services often show your score as higher than they really are. So when your lender pulls your score, in most cases, there's got a lot more factors that go into it, and your score will be lower. So I've had several clients come to me and said, yeah, I checked my credit and I had a 780 or 760, but the lender pulled it and it was a 700 or a 720. So be aware of that when you kind of are comparing Credit Karma and those services to the score your lender will actually pull. Okay, let's recap here. So there are 3 keys to improving your credit score. Number 1, always pay your bills on time. Number 2, pay down your debt to improve your credit utilization ratio. And number 3, avoid applying for new credit right before buying a home. These steps might take a little time, but even small improvements can make a big difference in the loan options you qualify for. Now again, I'm not a lender. These are kind of basic high-level tips for you to consider, and we can connect, and I can again refer you to local trusted lenders that I work with that this is definitely in their wheelhouse, and they'll be able to tailor a plan to meet your budget. If you're not sure where to start, don't worry, I'm here to help. Reach out anytime. My information is going to be here on the screen. Let's have a conversation. And again, I can connect you with local trusted lenders that I've worked with that have helped several of my clients buy a home in this market. Hey, thanks so much for watching. I really appreciate it. If you found this video helpful, don't forget to give it a thumbs up, subscribe to my channel, and hit that bell icon so you never miss a new video. And as always, I'm here to help you navigate your home buying journey. So feel free to reach out with any questions. Let's make your dream of home ownership a reality together. My name is Vince Burgess, your local trusted real estate expert serving the greater Austin area, and I'll catch you on the next one.